Hi everyone, crypto enthusiasts. Are you tired of constantly missing out one of the big crypto moves? Do you find yourself buying in just before the price crashes or selling too early before the real pump happens? It can be so frustrating, right? Well, today I'm going to share with you a powerful method that traders have used for over a century to understand when and why assets like cryptocurrencies are about to explode. We are talking about the Wyckoff Method, so if you want to know which cryptos are set to soar in 2025 and how to time your entries perfectly, stay tuned because this could be a game changer for your trading strategy. But before we dive in, remember to subscribe and join my Telegram channel. Here I share valuable insights into promising projects, key entry points, and help you avoid being a crypto hamster. Now let's get into the main topic of today, the Wyckoff Method. This is one of the most effective ways to identify when large players or smart money are entering or exiting the market. By understanding their moves, you can align your trades with the big players and avoid getting trapped in bad positions. The Wyckoff Method was developed by Richard Wyckoff. He was one of the pioneers of technical analysis, and his method focuses on understanding the behavior of supply and demand in the market. While it was originally designed for stocks, it has become increasingly popular among crypto traders because it helps you spot accumulation and distribution phases. These phases are the key points when large institutions or whales are either buying or selling. Wyckoff believed that by observing price movements and volume, traders could determine when the composite man, a metaphor for big players like institutions, was accumulating or distributing an asset. Understanding this can give you a huge edge because it allows you to spot potential price moves before they happen. The Wyckoff Method is broken down into 5 phases. First of all, accumulation. This is the phase where smart money is just buying. It happens after a decline in price and is usually marked by a period of sideways consolidation. During this phase, large players are quietly accumulating positions without causing the price to spike too early. If you are looking for the next big project in 2025, you want to identify cryptos that are in the accumulation phase. Now let's break down the next phase. After accumulation comes the markup phase. This is when the price starts to rise as demand outweighs supply. During this phase, you will see higher extremums and higher lows, signaling a strong uptrend. This is the phase where most retail traders start getting excited and jumping in. But smart money has already positioned themselves early. Distribution phase. This is the phase where smart money is starting to offload their positions. The price typically consolidates again, but this time the big players are selling off their assets to retail traders who are still buying in. This is the phase where inexperienced traders often get trapped, thinking the price will continue going up. After distribution comes markdown phase, where prices decline sharply. This is where retail traders start panicking and the price crashes. Those who bought in too late during the distribution phase are left holding the bag, while smart money has already exited. Reaccumulation. Sometimes after markdown, the asset enters another accumulation phase, which could lead to another markup. It's important to recognize this phase to identify potential re-entry points. To apply the Wyckoff Method in crypto trading, you need to understand how to identify these phases on a chart. And now it's time for a step-by-step guide. First, Look for a period where the price is moving sideways after a decline. This is the trading range and it's where accumulation or distribution is happening. In fact, you can use tools like support and resistance levels to define the boundaries of this range. Extremely important point. Volume is a key indicator in the Wyckoff method. During the accumulation phase, you may notice that while the price isn't moving much, standing inside the consolidation, there are occasional spikes in volume. This suggests that smart money is quietly buying. Conversely, in the distribution phase, you will see higher volume as smart money is selling. Next, watch for spring and test. One of the critical signals in the Wyckoff method is the spring. In the accumulation phase, a spring happens when the price temporarily dips below the support level, tricking traders into thinking the price will break down further. But instead, the price quickly rebounds, signaling that it's ready for a markup. A successful test confirms that the accumulation is over and the uptrend is about to begin. The best time to enter a trade is during the markup phase, right after the spring and test. This is when the smart money has completed their accumulation and the price starts to rise. You don't want to stay too long or you will end up buying during the distribution phase when the big players are already selling. As the price rises and enters the distribution phase, watch for signs that the smart money is exiting. This could include a lack of new highs, lower volume on price increases, or multiple failed attempts to break resistance levels. Once you spot these signs, it's time to take profits before the markdown begins. So why is the Wyckoff method particularly important as we head into 2025? The crypto market is getting complicated and with that comes more institutional involvement. Large investors like hedge funds, family offices and even governments are now entering the space. Understanding how they operate and how they move the market is crucial if you want to stay ahead. For example, in 2021 and 2022 we saw massive accumulation phases in projects like BTC and Ethereum. The same patterns are likely to emerge in 2025 as more institutions enter the market and accumulate assets before launching the next bull run. If you can spot these phases using the Wyckoff method, you will be well positioned to profit from the next big move. If you want to stay on top of which projects are in their accumulation phase and poised for explosive growth in 2025, make sure to subscribe and join my Telegram group. I provide detailed analysis including Wyckoff patterns so you don't miss out on the next big crypto opportunities. Now let's conclude. The Wyckoff method is one of the most powerful tools for spotting when smart money is buying or selling an asset. By understanding the phases of accumulation, markup, distribution, and markdown, you can time your trades more effectively and avoid getting caught in the wrong side of the market. As we head into 2025, institutional investors will continue to shape the crypto market. Let's call it a day. If you found this breakdown helpful, don't forget to like, subscribe, and share this video. Stay tuned for more insights and let's keep riding the crypto wave together. See you soon.